Let's talk about one of the most shocking stock movements in recent times. Inno Holdings Inc., also known as Inhd. This stock skyrocketed nearly 1,897% in a single day. Sounds insane, right? But here's the reality. This was not a normal growth story. It was a perfect mix of hype, speculation, and market mechanics. First, let's understand what triggered this explosive move. The company announced several headline-grabbing developments, including AI-related deals, Web3 marketplace partnerships, and a tech collaboration worth around $3 million. Now, for a microcap company, this kind of news can create massive excitement. And that's exactly what happened. Traders rushed in expecting the next big thing. But here's where things get interesting. Inhd is an extremely small company with a very low market cap and low float. That means there are very few shares available for trading, so even a small amount of buying pressure can send the stock price flying. This phenomenon is known as a low float explosion, and it can easily create 1,000% plus moves. At the same time, retail traders on social media platforms jumped in due to FOMO, the fear of missing out. The pattern is classic. News drops, hype builds, volume spikes, price rockets, early traders take profit, and then the crash begins. This is what we call a pump and dump cycle. Now let's talk about fundamentals, and this is where things look weak. The company is loss-making, with negative EPS, negative EBITDA, and no dividend. Institutional investors are mostly absent, which is a big red flag. On top of that, Inhd has a history of reverse stock splits, which often signals instability and makes price manipulation easier. Technically, the stock is still in a long-term downtrend with nearly 99% value destruction over the past year. That tells you everything. This is not a sustainable growth stock like Tesla or Nvidia. It's a speculative penny stock driven by hype, not real business performance. So what's the final verdict? Inhd is an extremely high-risk stock. It's not suitable for long-term investors. For short-term traders, it can offer opportunities, but only if you fully understand volatility, timing, and risk management. Here's the most important takeaway. If you see a stock already up 1,000%, you are probably too late. Smart money enters early and exits before the crowd realizes what's happening. In simple terms, this 1,897% move was not real growth. It was speculation, hype, and market dynamics at play. And moves like this are rarely sustainable. If you want, I can break down exact entry points, crash targets, and professional trading strategies for stocks like this. Just let me know. Stay smart, trade carefully, and always manage your risk.